Tesla was doing just fine in a tough market today when all of a sudden at the end it exploded. Well, what was the tough market all about and why did Tesla explode? This is Randy Kirk. If you like this kind of content on Wednesday, where we talk about Tesla's financial aspects of the stock, and we talk about the stock market in general, the macro and all things to do with finance, then please hit like, hit subscribe, hit notify, and then of course, possibly you'd like to support the channel by hitting Patreon. The information is down below. By the way, tomorrow morning, I've got a great video coming with Larry Goldberg. You don't want to miss it. And if you missed this morning's video where we talked about the Optimus, it was by far the highest number of views that I've had on any video out of the 350 or so that I've done so far. You may want to check it out. All right, let's get on to the story today. First of all, the headlines claim that the market was down today primarily over the jitters of whether or not the debt ceiling bill has the votes to pass the House. Well, you know, there's various opposition groups that are making noise on both the left and the right that don't want to see the bill passed for various reasons, some good, some not so great. But I'm not buying it. I'm not buying that this is the issue. Now, does that mean it has no effect? No, I'm sure whenever there is any kind of uncertainty, it creates a little bit of fear, that they won't ever be able to get this thing passed. And of course they will. We've had what, 2 times in the history of the United States when it hasn't. But there's uncertainty. So therefore the market could be down a tad based on that uncertainty. However, I don't think that was it. I think it had totally to do with heavily to do with job openings. You see, job openings, the JOLT index, shot back up to over 10 million. And the market was expecting it to go down, not up. 10 million, 10.1 million is almost the highest it's ever been. It's the wrong direction in terms of those who would like to see the Fed happy enough not to raise rates next month. So this is not good. So there is speculation out there. You may have heard me talk about this before. There's a little speculation that some of these jobs are phantom jobs, that companies are keeping jobs in the system on Indeed and on LinkedIn, et cetera. They're keeping these jobs active, even though they are not really intending to hire. They're keeping them active because they've had so much trouble finding good people over the last couple of years. I'm sure that's happening. There's enough evidence that it's happening. What I'm looking at is when you have the momentum going the wrong direction, you have a change going the wrong direction. That's what everybody's going to be looking at here. Not that there couldn't be phantom jobs, but unlikely that the phantom jobs are causing an increase in the number of jobs available right now for those out there looking for work. So we continue to have this 10-to-1 situation, 10 jobs available for every 1 person looking for work. This is historically crazy. It's completely the opposite of normal. It should be closer to, maybe 0.7 jobs available for every 1 person looking for work. And sometimes it's been lower than that, where there are way more people looking for work than there are job openings. So having it this way on a 10-to-1, 9-to-1, 8-to-1 level, it's crazy. And I know I've been saying this for a while. I've studied recessions for 35, 40 years. I've watched them all. I've written books, one book that I published and one that didn't get published on recessions. And I can't find a recession. Maybe you can help me here. I can't find a recession with full employment. Now, does that mean that jobs start going down before every recession? No. Sometimes it takes the recession to start the jobs going down. But I'm saying I've never seen a recession where there was full employment. 3.5, 3.4, that's considered to be full employment. Rarely you'll see a city or a state where the unemployment numbers get down to 1.5, 2, 2.5. Those are rare and fleeting, where there's a specific concentration of jobs in a specific geographic area. But for the whole country to be at 3.5, 3.4, that's full employment. So I don't see how we get into a recession with these kind of levels of employment. And I don't see how the street is going to be even close to right tomorrow with the ADP report on unemployment, or Friday with the Labor Department report on unemployment, Both of those are looking for dramatic drops from almost 300,000 jobs last month. One I think was 260 something, and the other one was 290 something, all the way down to 180 this last month. I just don't think that's possible. So when that comes out, if there's now 250 or 300,000 jobs by ADP and or by the Labor Department on Thursday and Friday, that is going to hurt the market as well. So yeah, so that's I do want to make my caveat. There is the possibility that M2, which is going down faster than it has gone in 50 years, that M2 could disrupt even a full employment market. It could interrupt it quickly. It could be a case of where the money supply completely drying up like that could result in the recession actually starting, and then you would see the jobs starting to drop after that. I don't think that's what the Fed wants to do. So I think it's unlikely that the Fed will continue to dry up money at this level if they start to see that it could crush the market in that way with no cash available in the market. Also, maybe somebody would have a theory as to how this labor market could cause a recession. I was thinking about this. If you have this many people employed over a long period of time and this many job openings over a large period of time, you might start to get inefficiencies where companies are hiring people that are not really at the right skill level to do the job, or they might be promoting people to skill levels that they're not competent for, and that can create inefficiencies in the market. I have seen that before. I want to say it might have been the 2000 recession, but I'm not positive of that. You start to see these inefficiencies. My example, maybe I've said it before on my YouTube channel. One day I walked in to purchase some kind of item in a department store. The clerk there it was their second day on the job or third day on the job. They were completely incompetent to take care of me. The next day I was in a car dealership to buy a car, and the person that was waiting on me had just recently been working in a department store and had no clue as to what they were doing in that car dealership. So we've had markets like this before. This is a very mature employee market where you have a lot of folks that have been on the job for many, many, many years. So I think it's less likely. We also have a lot of new automation going in with ChatGPT and whatnot. So that would tend to create efficiencies. Lots of stuff going on there. Maybe somebody out there has some ideas. Put it in the comments below. You know I love your comments. So please comment. All right. So what happened then? Why was Tesla kind of moving with the market? Even more so, moving with the risky growth stocks. I don't know why Tesla continues to some days move with the risky growth stocks, but the risky growth stocks were doing better than the NASDAQ, and they were doing better than the Dow, and Tesla was doing better than both. And all of a sudden at the end, it just jumped up like crazy. Well, that was because, in my opinion, I could be wrong, that Reuters was reporting that Elon will see the first production of the Highland model while he's on his visit to China. These would be coming off the line, according to the rumors. Now, this would confirm the rumors that there is a refresh. Remember, Tesla has never said there's such a thing as a Highland. Tesla has never said that there's going to be a Model 3 refresh. This is all based on rumor and speculation. I think Tesla has not wanted to say it because they want to clear out all the old Model 3s before they start producing the new Model 3s. But there's the rumors, and all the connecting the dots would certainly indicate that there's going to be a refresh, and that the refresh is going to happen both in Fremont and in Shanghai, and that both of them are just about ready to start up this production. In fact, people are saying that it'll be right now that Shanghai is shutting down to fix the line. Well, then after hours, there was a correction. So it shot up, and then there was a correction. That could have been profit taking, could have been end of the month. There's a lot of reasons why that correction could have happened, but I think the correction was due to the fact that people took a closer look, and it said it was a rumor. Not only did it say it was a rumor, it said that the first items, the ones that Elon would be looking at, are prototypes. I think that would be wrong nomenclature. So a prototype is something that you build in the art studio, and it's made out of, or you build one at a time by hand. These are coming off the line. These are generally called first articles. And they might be first articles before you completely tear down the line and then make sure that it's 100% ready to start the ramp. So a lot of confusion. People looking at prototype might have thought, oh no, we're not close. People looking at the fact that it was totally a rumor, it was not an official announcement. Anyway, lots of reasons why the after hours might have been showing a little bit off. We could see more reporting on this during the course of the day, maybe people sneaking out pictures, who knows? Some of the other rumors were that it's longer and sleeker. That's been a rumor for a while anyway. I'm hoping that this lawnmower in the background is not interfering with the sound quality, but there's nothing I can do about it. Okay. What else here? Oh, yes. What we don't know about this car, we see this big jump just on the confirmation that it exists, or more confirmation that it exists. What will happen if the car actually looks good? What will happen if it has a sticker of $35,000 in export market and $29,000 in China? Then the market's going to go nuts. We just need more information, but it certainly sets up some potential catalysts over the next week, 2 weeks, 3 weeks, as this new refresh actually comes out. Now, once again, I want to remind you, hit like if you like this content, but really, really, really hit notifications so that you will be reminded to see this Larry Goldberg video tomorrow morning. He's talking about the value of the supercharger network. You might have seen some of his stuff on Twitter. You might have seen one other place where he was on a YouTube video. Believe me, we get into it in a different way on this YouTube channel. And I think you're going to like what Larry Goldberg had to say. And by the way, he puts me in my place. Isn't that fun? That'd be worth it all by itself, right? Okay, you don't want to miss that. And then this morning, the video on Optimus. Yeah, it's a fun video. You definitely want to check that out. And then that's all I got for you today. And it's been great talking to you.